I think Bitcoin and equities are going to be very, very uncorrelated this year. And I think this is a big year for Bitcoin. If the halving number is 100, all right, if that's the target, and then we back up from that, we say, all right, well, where are we today? We're at, 23,000. Where should we get by the time the halving occurs? Could we be back to 50, 60,000? That's a pretty good guess. Then as we approach the halving, we start to accelerate into the target, and then we parabolic past it. Fair value is 100K per Bitcoin. How close we stay to fair value is the question. Do I think we get there by the end of this year? Probably not, but could be surprised.
Bitcoin's bull market is likely to start earlier than expected due to anticipation of the Bitcoin halving and favorable macroeconomic conditions, according to Mark Yusko, founder and CEO of Morgan Creek Capital Management. After the impressive rally in January, Bitcoin seems to be taking a breather in February. The year 2022 was a bad one for cryptos. The average loss in individual tokens was around 70% across the crypto market. However, 2023 is looking promising so far. If Bitcoin continues to increase at such a speed, we can easily expect Bitcoin to reach its previous all-time high price of around $69,700 and even breach it higher towards the 100K price. This is a positive sign because vertical rallies are rarely sustainable. A minor dip could shake out the nervous longs and provide an opportunity for long-term investors to add to their positions. He expects risk assets to turn bullish if the United States Federal Reserve signals that it will slow down or pause interest rate hikes. Another potential bullish catalyst for Bitcoin is the block reward halving in 2024. If the price turns up from the support zone, the bulls will again attempt to catapult the Bitcoin and US dollar pair to $25,000. This level should act as a formidable resistance.
It's not the beginning of crypto summer. It's a short squeeze, a good old-fashioned short squeeze, both in the equity markets and the crypto markets. Everybody was, getting short towards the end of last year. I mean, it was a horrific market, right? Bonds had a horrific market, stocks had a horrific market, crypto had a horrific market. Everything was negative. And what happens when everything's negative, people start selling for tax purposes towards the end of the year. Then what happens is you have to wait 30 days for wash sale rules, and then you can buy these things back. And so what happens, it used to happen all the time, Giovanni, in January. So everyone would do their tax loss selling in December. They'd wait their 30 days. And sometime in January, they would buy these assets back, and you'd get this big move in the things that had done the worst the year before. What I'm trying to say is big short squeeze, hugely overbought, hugely overbought. Bitcoin's as overbought as I've ever seen it. That is not a condition to start a long-term bull run, right? That's a condition for short-term weakness and kind of a retracement, and then the start. But the pattern we need to look for, and we talked a little bit about this last time, is even though there's chop in spring, what you're looking for is a series of higher lows. Now, you like higher highs too, but that's not as important as higher lows. If you keep making higher lows, that means there's accumulation pressure in the market. And I think, we're going to be range bound in this, call it 20 to 24 range for a while. Then we'll be closer to that summer period. And I think that's just time, place, and events, April-ish. And again, seasonally, Q2 and Q4 are the most positive for Bitcoin. So it's setting up to have a pretty nice move April, May, June this year.
The next crypto bull market will start sooner than most people think, according to Mark Yusko. Yusko thinks the next crypto bull run, or as he calls it, the crypto summer, could kick off as soon as the second quarter of this year due to the combination of more dovish central bank policies and the anticipation of the Bitcoin halving. While the United States Federal Reserve is unlikely to cut interest rates anytime soon, according to Yusko, the markets tend to anticipate the Fed's decisions. That means even a slowing down or a pause in interest rate hikes would be interpreted as the signal of an imminent pivot. That would spark a positive dynamic among all risk assets, including crypto.
So I think by the end of this year, CPI is going to be close to, it could be zero, it could be negative, month over month, quarter over quarter. But, trailing numbers probably be around 2%. That's not a situation where you need to be tightening. There will be a tailwind, I think, for digital assets. The market is saying by the middle of this year, the Fed's going to be cutting. Now, I think that's too aggressive. I don't think that's going to happen. It's possible, certainly possible, but I don't think it's going to happen. What I do think is very likely, is the Fed signaling that, okay, we're good, but that will be interpreted as we're going to cut, and then risk assets will explode again. Crypto markets, particularly Bitcoin, are very uncorrelated to stocks, other than for very short periods of time during deleveraging. The only time correlation rises is when Bitcoin is being forced to be sold because there's too much leverage. There's not as much leverage in the system as there was. We had a big deleveraging. In the crypto market, I'll argue there's very little leverage left. Very little leverage left. So the idea there's going to be a bunch of unwinding in crypto, not very likely. Now, is there still leverage left in stocks? Yes. Could that deleveraging cause people to sell Bitcoin? Less. Why? Because they already sold. So now what we have is a holder base that's very different from the holder base of stocks and bonds.
A growing number of banks have been reducing their exposure to the crypto market following the collapse of crypto exchange FTX. Binance said last month that its banking partner Signature Bank will only process transactions exceeding $100,000 from the beginning of this month. The bank previously stated that it plans to reduce up to $10 billion in deposits from cryptocurrency clients. The agencies have significant safety and soundness concerns with business models that are concentrated in crypto asset-related activities or have concentrated exposures to the crypto asset sector. The Fed's interest hike matched the market consensus, and weak employment data boosted investors' appetite for risk assets. Combined with the lack of demand from margin traders willing to short Bitcoin, the derivatives markets paint a bullish picture. Even if it takes a little longer to break above $24,000, there are no signs of stress coming from the Bitcoin margin and options markets. However, traditional markets continue to play a vital role in setting the trend, so Bitcoin investors should not become overconfident.
Don't wait. Buy. Buy some today. Buy some tomorrow. Buy some the next day. Buy some next week. Buy some next month. Don't buy it all at once. Pick a number, right? I say, 3 to 5%, whatever the number is. If you're younger, that number can be higher. I'm talking a 3 to 5% core position in Bitcoin, higher if you're younger. That's what I'm talking about. Now, beyond that, you want to invest in Ethereum as a platform that builds out the infrastructure around the digital future. Small numbers, law of small numbers, says Ethereum will outperform. Right? It's a smaller asset base. If there's a bull market, it will likely outperform. And history tells us the smaller market cap assets outperform in bull markets. So if you want to own a core asset forever, accumulate Bitcoin. If you want to have a portfolio of other technology investments that you think have a higher upside potential, own some other things. Own Ethereum, own Avalanche, own Polkadot, own Cosmos.
Crypto market is off to a good start with leading cryptocurrencies like Bitcoin and Ether. The first half of crypto market ended in green streak. The price of Bitcoin is unpredictable as Bitcoin experienced 10% growth rate in its value in 2023. On the other hand, Ether hit a $1,666 trading volume, up by 3.47% in the past 7 days. On Monday, Ether developers released progress on the network's next upgrade, Shanagi, which is expected to launch by March. This new Ether upgrade will help the users to withdraw their Ether staked from the past few years systematically and securely. Do you think Bitcoin will hit mighty 100 by the end of 2023? Let us know in the comment section below. If you find this content interesting, give this video a big thumb up and do subscribe to our channel. See you in the next one.